Let's get one more view on the economy as a whole. Renuka Ramnath, founder and CEO of Multiples Alternate Asset Management Private Limited, joins us now to talk more about that. In fact, Renuka is with us in the studio, so let's welcome her. Hi Renuka, good morning. Happy New Year to you. And thank you for taking the time out and joining us here in the studio. 2014 was a very good year for private equity investors if you looked at both fresh investments as well as exits. Do you foresee the same for 2015 as well?
Very difficult to say because in 2014, even if you look at what transactions happened, it is largely concentrated on one sector, which is IT and ITES. A lot of e-commerce transactions, BPO transactions. The rest of the sectors, particularly infrastructure, was next to nothing. I would say that there is a long-term positive outlook for India. When we talk to investors all the time, and there is interest in knowing the India story, evaluating the India opportunity, which was not there a couple of years back. But I wouldn't say that they're all ready to open the purse with the same level of enthusiasm that I saw in 2005.
Okay, so 2014, as you said, was dedicated largely to e-commerce. In 2015, do you see it, at least to some extent, getting extended to the other sectors? And if yes, which ones?
So I expect that 2015, large part of PE transactions will be PE to PE.
Okay.
So it would be much more diversified because it's a question of what assets have matured in the private equity portfolio, which will now come up for sale. So if I look at our own deal pipeline, it's very diversified. So it goes everywhere from, I would say, specialty, chemicals, manufacturing, healthcare, financial services, and so on.
Okay, you did mention that infrastructure sector is yet to see a revival, and I think everyone's waiting to see some signs of that. What do you foresee for that sector? Do you see any opportunities in 2015?
I don't see personally any opportunity.
Okay.
One of the big challenges for the infrastructure sector is going to be how do you recalibrate the balance sheet itself. So all these companies need large balance sheets to bid for big projects, but their current balance sheets have a lot of challenges. So how do you re-engineer your balance sheet to attract fresh capital is going to be a challenge for infrastructure.
Your fund recently exited South Indian Bank, if I'm correct. What was the rationale for it? Was it something just matured, or are you a bit cautious, or do you think that the valuations have hit pretty reasonable levels and therefore the exit?
So I would say it's a combination of everything. As private equity investors, our job is to enter and exit. Our investors would like to see some cash back as well. At the price at which it was trading, given that we had entered at a very attractive price, it gave us reasonable returns. So it was a great opportunity for multiples to return some capital to the investors. And we could also get interest from a domestic investor, which also helps the bank. We are very, very conscious of the fact that when we exit our companies, we have to leave our portfolio companies in a better place than where we started. So I thought it was a win-win for both multiples and the bank.
Okay, so having said that, will you be raising fresh funds at multiples? And what could be the investment strategy that you have in 2015?
We are in the process of raising our fund. We have, done our first close for the second fund.
Okay.
We've come up with a very interesting structure for the second fund. We have a main fund of 500 million with a co-invest fund of 150 million.
Okay.
So we would be raising about 650 million, which gives us a flexibility to invest in transactions anywhere from $25–30 million all the way up to $100 million by ourselves. And of course, along with our investors, we can do much larger transactions. I have always argued that for India, the best investment strategy is an opportunistic investment strategy. I expect that in the next 2 to 3 years, there will be many opportunities to invest arising out of corporate restructuring. There are lots of demergers that are already happening in the country, and they present very interesting opportunities. There are situations where company sponsors, i.e. promoters, are highly leveraged, and they would like to use a corporate restructuring formula to bring down their own leverage, and that will present attractive opportunities for PEs. I also see that significant percentage of assets which are technically non-performing have a lot of hidden value, and I expect that some of those assets will present themselves as attractive PE opportunities. So my strategy for our second fund is going to continue to be an opportunistic investment strategy, more focused on re-engineering of balance sheet, re-engineering of companies, and of course there are always those favorite consumer sectors around retail, around healthcare, around financial services, which will continue to dominate our preference for the second fund.
Okay. Are a lot of your portfolio companies looking to tap, the primary markets and do an IPO? Are we expected to see a lot of IPOs happening this year? Because last year it didn't take place to that extent.
I would also not put a lot of, optimism on tapping capital markets this year. I would still think that access to private capital will be a preferred option for most companies.
Okay. So just a two-part question. You said that you don't see too many opportunities in the infrastructure sector. So which are the 1, 2, 3 sectors that you see opportunities in? And you've also made a lot of investments in listed companies. Do you see investment opportunities increase in listed companies after the run-up that we saw in the equity markets?
Yeah. So as far as listed companies are concerned, now I have been in the market as an investor for close to 15 years. Every cycle gives you a new set of opportunity, and you have to be, attentive enough, and you have to really look at which are the new segments that are giving you an option. So if you look at our investment even in a company like PVR, PVR is not a new story. We invested in 2003, and again we invested in, 2012, late 2012. It has given us a very handsome return, even from our, second investment, which happened almost 9 years later. So there are opportunities in the listed space which will give you the returns arising out of a new story. The new story could be a disruption. In PVR's case, it's a consolidation wave that is going on in the multiplex industry. Similarly, with respect to certain companies in the seed space, there could be
Cholamandalam investment.
Cholamandalam again is a fantastic story of how the new management completely turned around the company and brought them back in line with their core business, and brought in a lot of discipline around lending and collections, which has resulted again in a phenomenal return for us. So I would say that listed companies will always present attractive opportunities for PE, and it's our job to locate those high alpha investments.
Okay, we don't have time, but if you can just tell us what would be the key themes to watch in 2015?
The key themes would be, as I said, a lot of corporate action. I expect deleveraging of balance sheets, demergers, consolidations. The high growth story will be fewer. It would exist, but it would be a lot fewer than what we have seen in the previous high, which was the 2005-2006 phase.
All right, Renuka. Thanks so much for joining us and talking about all the themes to watch, and of course your investments as well.